what are some items that banks like oftentimes overlook? And there's some lenders where it's like for every four SBA loans, like one defaults. So they're obviously not doing something right. What are some data points that they really need to be looking at for underwriting these loans?
I think a lot of times banks they'll find what works for them, and they'll stick with that mold, and they'll apply it, broadly, and in a lot of ways that may not make sense or be applicable. Or conversely, they'll have one bad experience and then they'll stop doing that forever. And it's like, no, that one bad experience isn't the case for the other 5,000 experiences you could have. So with data, and in both of those, you can certainly expand, your small business lending activities, but then also realize in a timely way where you may be focusing that's not going to work out. Because you don't want 1 in 4 loans defaulting. You don't want 1 in 40 defaulting. What we do, we look at different features in our model. So we have over 3,000 different scorecards that we look at when we're analyzing a loan. This kind of gets into some more of our predictive models. We put our features into different buckets. We look at business factors, economic factors, and then credit factors. So business factors will include things like the industry that it's in, the type of business it is, the ownership structure. Economic factors are going to look at what's going on in that area, what are inflation rates, labor participation rates, and then credit factors, which are more in line with the owners of the business. What credit factors you're looking at. And I think a lot of times banks will just focus on those credit factors. Somebody starting a business and they want to see, how they've done paying their telephone bill. And those, it is an important piece. I'm not saying it's not. It's an important piece, but there's so much more.
But they could, like, someone that's been successful in a prior life could be swooed into some franchise business model that's half baked. And
exactly,
no matter how successful they were in the past, if they selected a business model that doesn't make financial sense.
Yes.
There's some, as you know, there's some franchises that also default more loans than are paid in full. There's not many of them. Maybe there's like 10 out of thousands, but there's a few notable examples where the model doesn't work.
You're exactly right. And conversely to that, somebody that's going to be a great operator of the franchises in a great location makes complete sense to do it. But 10 years ago, they've got a bad blip on their credit report. And the bank says, "Oh, we can't do that. Look what happened 10 years ago." And it's like, no, this is gonna be fine. Look at all these things in favor of it. So it works. It's both sides.
And I imagine like it might be a little different for SBA loans versus some conventional loans because of the personal guarantee that people put forth for that 504 and 7A.
Yeah, I think in both cases, with SBA loans, first of all, there's kind of a test for credit elsewhere. Is reasonable terms, credit on reasonable terms available elsewhere? If not, you go the SBA path. But it does come with those personal guarantees and conventional lending as well. So starting a business, starting a franchise, you got to believe in the future that you're putting a lot on the line for sure.